All right, for this video, we're going to be doing a data analysis study on volatile days and how they appear on the daily chart, and maybe if there's a way to trade the daily chart based on this data. I think that would be a good idea, maybe. So let's see. So volatile, I have a way of defining volatility. To me, if the market's moving faster than normal, twice as many increments have happened than normal, that means it's quite volatile, in my opinion. And oftentimes it is. You can just see basically the number of increments it moves. Let's say you split up the market in 25 points segments. How many 25 point segments does it move today? Well, if it moves double tomorrow, moves double the next day, that means that next day is more volatile. It is. And there's a way of seeing that how fluid that the market moves through these increments, these sections of price, that I can put in a quantitative way. Is it going more lateral, more choppy through these, or is it fluidly going 25, 25, 25, 75 in a row and then come down? That would be, trending. In my case, mean reverting. So there's trending or mean reverting, and I have yet to find really good names for this, but I'm just saying trending or mean reverting. So for these bars, we're looking at these purple ones, which is very, very mean reverting, very lateral, but very fast. Okay, these days are full of trades, but I mean, way more than normal, a lot more action than normal. However, the trend score is very low. So it's a lot more chop is what you would call it. So what happens on these high volatility chop days? So let's look at it. February 26th is one of them. Actually, I went through them all, and for the past since January. So it's been 9 months of data, and this is what I get out of it. So these sections, we're just highlighting one bar, so the middle bar of each one of these circles, and I want to see what happens to them. So let's just go through the bars and see if we can find a trade strategy to implement on these types of bars. So basically this one you see is a doji. It's indecision, and it does not break the high. It breaks the low and then never returns for a long time. I shouldn't say never, but it doesn't return for a long time. You can capture 10R. So that is immediately I'm saying, all right, breakout of the range. So it breaks the low. All right, we're selling short. And then our stop's at the high. In this case, it would have worked. But let's see what the next trade is. Next trade's the same thing. It creates this day, and underneath the low is broken. You sell short. It does capture at least 3R, and then comes out and breaks you out. It's still a capture, in my opinion. Let's see what happens. This one, the same indecision here, similar to that one up there, but the same indecision here, and it decides to break lower, but then it gets stopped out immediately after. So it only goes 1R about before it gets stopped out, and then from that stop out point, it does not return. And I can say never in this case because that thing kept on going up. So to me, it's not necessarily just one breakout. It could be a stop and reverse system. But obviously there's only 3 samples here, so we got to keep on going here. So let's see this one. This one, June 13th. This red bar here in the mix here, red bar. And, I mean, it looks like it does not break that low. It breaks the high and then breaks the low. And then breaks the high and then doesn't return. So, again, You could do a breakout box on the range just like the other ones, and it would have worked great. Still, I mean, you would have lost one loss. This one almost gets there. I don't know. I probably wouldn't have gotten out because it's not past the high. So, anyways, you lose once, you lose twice, and then from this area right there, you go long again, because the idea is to have a breakout box. You buy the high. Oh, it doesn't work. Sell the short, the low, and you use this box as like, hopefully it doesn't range, hopefully it does escape from this box somehow, and you're 100% going to be on the move. Not all the time will it move this far, but in this case it did. So the breakout boxes work for pretty much every single trade yet, but there's only been 4. Yeah, I know. But hey, 4 out of 4 is pretty good. How would I get out? I would trail stop. I do trail stop because that is just pretty much the most easy way to do it, because you never know how far it's going to go. At least I don't. This one, August 1st. Are you sure it's the August 1st? I do. I'm pretty sure. Yep, August 1st. It's very mean reverting. It's almost 3 times the energy, 3 times the volatility, 3 times that the trade count. I use trade count or increment count. Sorry. In this case, I think it is trade count, but it's very similar. Yeah, I use trade count, but it's very similar to increment count. They're correlated. But anyways, it's 3 times the normal trade count, but it's very mean reverting. It's not trending. There's a lot of energy here in August 1st. And what happens from this date, you can see that it does break the high, and it has not broken the low yet. And that's, again, another breakout upwards. So, again, these days seem to be a good spot for a breakout, in my opinion. A simple breakout. Break the high, go long, break the low, go short, either one. This one, August 7th, I believe, is the last date. August 7th was another one. I would already be long from here, but whatever. Let's check the same thing on August 7th, and we see it break the high, and break the low, break the high, break the low, break the high again, and then it's gone. So you really, if you were to do that bar, you would be losing 1R, 2R, 3R, 4R. You'd be down 4R and then still holding on to this if it keeps on going. So I would obviously need more data, but in general, that's what the inside the bars, if we look at the data inside the actual daytime, inside that movement of price, and we see it's very cluttered and clustered, but a very high frequency, a lot of speed that these days, it does seem to be at least areas that price will move from. Okay. And it doesn't seem to be exact. And I think that's the thing. In trading, we always are looking for, I'm always looking for just something perfect, something that works every time, something that looks like this. Like, oh yeah, if I see this, it goes down. It goes all the way down. Oh yeah, and if I see this, it goes up. In these moments, look, what we should be looking for is something that generally works and can have potentially some edge. Okay. And all we're looking for is more than 50% of the time. Really, the edge that we need is not actually crazy. It's not really that crazy. On average, over all the trades, if you're up over 0.3R per trade, if you can capture 0.3R per trade over a series of trades, I call that edge. 0.3R, I mean, which is not crazy, right? I'm not going for 0.3Rs, of course, but But overall, over a series of 1,000 trades, that would be edge to me. So anyways, what I see from here is, again, high volatility, low trend score. You generally want to place a bracket around the price. So how I would honestly do it is go ahead and let's just go ahead and go with this one. I'd place a bracket around the high and the low. If it breaks the low, I get short and I lose right there. I lose 1R. It goes 1R, but then I lose 1R. And then I go long, and then I hopefully hold on to it. It goes 1, 2, 3, 4, 5, 6, and then so on and so forth if we're still holding. But I would probably trail it. I'd probably trail. I don't know the trailing method I would choose, but I don't think it's super exact. The more you hug price, the lower chance you'll be able to hold on for the big wins. The whole point for trailing your stop is probably to have those big wins. So I would probably do a lenient or, a lenient, the more it goes, say a percentage trail, which is the farther it goes, the actual risk box is becoming bigger and bigger. You're allowing it to wiggle more and more as it goes in your favor. And then eventually you close that up and then you sink tighter on it and then you lock in your profits. That would be the perfect trade to me. And that's probably what I would implement in this system. Let's just go through this one again. I think this one looks to be the biggest loser. Right here to here. It goes, breaks the high. I get in long. Boom. Get stopped out. Get in short. Doesn't get stopped out until now. I get stopped out. So I lose 2R and I'm flip long. I flip long and I'm long for 1R, 2R, 3R, 4R, 5R, So, but if you look at back in time, you see we don't know back previously. We don't know to the left here. The market's been really trending. It's been trending lower, trending higher now. It's a very good trending environment right now for the market. But if you really look at to the left here, it doesn't trend that well. There's a lot of back and forth, and trail stops generally don't work well with those. Generally poor performance, and especially if we see some of these days, these breakout they're not going to work. They're working right now. In the past, for this year, 2025, it works really well because it was a very trending year thus far. But the past 2024 looks to be a lot of chop. So it probably wouldn't have worked. So I would have to back test way more data than this. But that's all I can say. I like just basic knowledge is if it's a high volatility day, but a high chop as well, it might pay to form a breakout off of the high and the low of that day. In general, very general sense, yes, I would commend that. But I would obviously want a little bit more data than 1 year. But yeah, I feel that, bro. I like it. All right. Thanks for watching. I'll see you later, mates. See you later. Peace.